And how's things? This is impromptu, not unplanned. Sitting on the bed, looking at my homework. Thought, I'll just do a YouTube live and see how everyone's doing. I was just doing a bit of homework on, I'm getting ready for my swing trading. I don't know if you guys watched it, but VIX is starting to look attractive again. The sell-off is here. Reasons for it. So it's swing trading mode for me. I believe these things are going sideways. Doing my homework, I thought, yeah, just go YouTube live, just share it with everyone and see, be as transparent as possible. It saves me 2 hours trying to edit the video, and it just gives you straight up front information. Easy peasy, lemon squeezy, unplanned. I like it. Impromptu, I like it. So I just want to say hello to everyone. It's late. It's 11 o'clock in the UK. But I thought today's session will be about stocks. I might do another one about crypto later on, about crypto farming, but this one is focused on stocks. So I been reading around and really seriously, what is going on with the sell-off? Last week I was saying folks who was in crypto was at all-time high, everybody enjoying it. Stocks were looking at recovery. Lots of people like regretting, saying, "Oh man, I should have bought stocks." It took nice 7-8 days of green going upwards, and many people going, "Oh, I've still got cash. I've not settled in." And some people actually buy on the FOMO, buy on high. So like I deliberately released a video about the VIX again, just to resurrect about the VIX. If the VIX is below 22, stop buying. Do your homework between 22 to 20, and then eventually when it goes below 19, 18, think about selling, taking some profit, go back in the market, have cash. So today, as you can see, the VIX is at 22. And if you look at the last few days, the VIX have, the last month, the VIX have dropped considerably. It's going as low as 19, 18. People are chilling, relaxing, people are getting off guard, not thinking about taking a bit of profit. And then now, looking back, it's starting, the VIX looks like maybe on the return. And genuine reason for it, like I said again and again, we are not ready for a bull run yet. We are still in a bear market with genuine reason for it. High inflation, the war might be over. Looks like maybe over. People are still suffering, but it's been dampened, downsized compared to like 6 weeks ago. But then again, high inflation, interest rate, quantitative tightening, all this are all in the play. So the real key reason is yesterday this came out. This news came out like yesterday, this time last night, about the Fed governor, Miss Leigh Bernard in San Francisco. She spoke out right. Okay, this is the lady Leigh Bernard. Now it's not just the federal, it's not just Jerome Powell. People within the panel are speaking out, saying there's a huge concern with inflation. We have to dampen it. We cannot let this go on. We can't print money. We have to raise interest rates. At the same time, we have to quantitative ease. We have to start getting rid of our bonds and the debt. So this, textbook wise, as we've seen in the last decade, we will get quantitative easing, slows down. We go into interest rate rise for a couple of years, and then tightening, which we start selling bonds. The last time it took across about 6 to 7 years. Now this time they just want to go all in. Inflation's high. We have to start getting rid of our debt. We have to raise interest. We have to raise cash just in case. Just in case. I repeat, if there's another recession, they cannot go negative interest rates. So just in case, they have to reduce the debt a bit. If they do get into recession, if we cannot control it, we cannot tame it, then we can lower the interest rate. So they want to hike interest rate, they want a quantitative tightening at the same time. So that is the real reason behind, the real fundamental behind it. And if you want to go even deeper, folks are speaking about the 10-year treasury yield, inverted yield, non-inverted yield. There's discussion about it. The inversion of the yield will tell you in the next 18 months whether to be recession, and people are preparing for it. So that is also a discussion, but I think that's a longer term one. So short term wise, market going sideways for me. Buy great quality stocks, and if you own them, buy on a good dip. If not, do a better 10-20% swing trade, take profit, try to raise capital without putting more money in the market. I'm not putting any more money in the market. It's quite dangerous putting more because emergency cash, inflation, things are going up in value. You need to watch for number one. You need to watch your family. So that's where I'm coming from. Okay, so this is an interesting chart by Charlie Bilello. And I think US now is about 7.9. I live in the UK, so about 6.2. Folks in Japan, China, they are still Still considerably well because they produce Taiwan 2.4, so I don't really hit that. But it seems like the European countries are getting hit. Italy 6.7. So this is serious. This is going up again and again. Things are going up in prices. It's ridiculous. Okay. If you do your budget, you will realize things are getting more expensive. And in fact, inflation only covers like the likes of the milk, your egg, your fuel, your travel. But if you do your proper budget, yeah, if you really do your budgeting, it is not just 10 under 10%. In fact, it's actually more. When I did my budget, it looks like everything's gone up by my overall expenses has gone up by 30-40%. The fuel, the mortgage, inflation don't account for your mortgage, don't account for your gas bill, they don't account for your kids' tuition fees or your sports or anything. Things go up. They don't account for your Amazon Prime or Netflix. Things goes up. Honestly, compared to 18 months, 2 months ago, I'm paying 40% more outgoing. I'm using my car more. I'm paying more money. I'm not even traveling. I'm not even enjoying going out and eat. We're actually trying to save, but more money is going on. So this inflation numbers is a lie. You have to watch out for your number one. You have to watch out for emergency savings. But it doesn't stop you from nice swing trading. VIX chart 22. I want to share that this is the one I watch when I do my swing trading. I only watch a large capital now. I'm not going to bother with the lower growth cap. I'm not going to bother with the hyper growth stocks. I'm going to just focus on the FANGs, anything that's a mega cap. That's the list I looked at and thinking, oh, what's a good buy? So I've got a list here. I've got about 4 that I'm watching. I've set aside, allocate about 5%. I've swing trade. I took profit. And now I'm getting ready to go into the market because VIX is 22. That's my rule of thumb. When VIX goes 22 and above, I start looking. But when VIX is below 20 to 22, I do my homework, and this is my homework. I'm getting ready to pounce at the right time. I might be wrong. The VIX might not go even higher, but I put my entry point, and when it sells off, come back down. So the market will be going on a swing, on a sideways. It might go even lower, but there's there opportunities for you to take profit. No emotion. Try again. So I've got a couple of ones. So the first one that I think I have already started going in is today is AMD. My buy today AMD. Anything under 115, I buy. Okay, AMD. Okay, but I'm loyal, sort of loyal-ish to AMD. But 103 is great. So I've set aside about 5%, 10% for AMD that I will buy anything. 108, I started 108, 103, I started buying. So I'm going to swing trade. If it goes to 150, 130, I'm going to take profit. Simple as that. So between now 103, it might even go lower to 195. And if it goes above 115, 120, I'm going to take profit because option traders are looking at selling at 80, as low as 80, and taking profit 120 when the earnings comes out. So earnings will be the game changer. Yeah, if they miss the earnings or not expected growth reduced, they drop as low as 80. If they do well, they smash it out of the ballpark because they've bought out another company. We're talking 120. So we're in the right zone here, 103, 120. It's a good $17 in between for per single share. So I've entered AMD. And if AMD drops below, what am I going to do? I'm just going to hold it. I'm just going to hold it. I'm going to hold it for long term because, like I said, swing trade on my stocks just now is I'm going to buy mega cap and the stocks. If I lose out on the swing trade, I hold them because they are the caps that I want to hold. Okay, so AMD is a one of mine. One I've entered, but I'm not going to go in position because I've got 3 other stocks that I am looking at. Okay, again, mega cap. The next one that I like, and I've lost my Fibonacci retracement here, is Google. So I like Google, and stock split coming up. And I think media, digital service, inflation is not going to really hit them that hard because end of the day, they're not shipping products. They might be shipping a few phones. They're not shipping big truckloads of stuff that oil will be hitting them. So Google advertising, YouTube is growing. It's even beating the likes of Netflix. So I've lost my Fibonacci retracement, but I'll redraw it again and show you where I am liking this chart. I checked it just now. So drawing up to the top point before COVID hit. Okay, so I am actually looking at the entry. If it goes 265, I will make an entry. It's about 272 just now. If it's 265, I'll make an entry and a swing if it goes above round about this zone here. I'm not going to wait till it goes to the high. Round about 280, I'll take profit. So between 265, 280. That's what I'm looking at. If it goes a bit lower, I might even get a second entry round about that zone just before 244, around about 250. So that's what I'm looking at Google, just to swing up and down. Because end of the day, after the stock split, there'll be a FOMO people buying in. So even if I missed out on a swing up, I can buy, hold until the stocks rise. Stock split comes in, it will go rise. I still take profit. So swing trade doesn't mean within 1 or 2 weeks. Sometimes swing trade lasts as long as 2 to 3 months. Hold it, let it go, take profit, move on. Or if you like it, sentiments are great, and hold on, and you can hold it even longer. So Google is my second one. So I repeat, my looking zone is about 265 or below, and I will take profit about 280 for Google. Okay. So the next one I am looking at is Goldman Sachs. Okay, interest rates are rising, and Goldman Sachs is low. It's at 317. I'm asking the question, why? What is this happening? I don't know. But again, I'm going to stick to the game. No emotion. Goldman Sachs has broken 354 already. They're going as close as 313. Okay, they're very close to a buy trigger of 313 just now. This support level. If they hit 313 or below tomorrow, I'll be buying. Interest rates are rising. Like I said many times, Goldman Sachs will be making money off high interest rates. They'll be making money off new mergers. They'll be making money off the new blockchain companies. They'll be making money off the oil traders. So I don't see how Goldman Sachs will not do well in this market. It's one of those companies that do well in recession, they do well out of recession, as long as they keep the expertise in house, which they have done by paying people higher money, better salary. So I like Goldman Sachs. I'm sure Warren Buffett likes Goldman Sachs as well. To me, it's an easy one. No emotion. Once hit 313 tomorrow or 310, I'm going in, getting a bit for swing trade. I've already owned some of them, and even in my retirement portfolio. But this is for my swing trade. So a bet swing trade, just have a bit of fun for the itchy fingers on the side. Okay. And what? So I've talked about AMD, Google, Goldman Sachs, and the last one I'm talking about again, a company that I would own anytime is Microsoft. Okay, it's at 299 today. I'm looking at 299. It's one of those Microsoft, between now until before Q3 ends, Microsoft will be going sideways for this while. Okay, Microsoft always perform within the Christmas, New Year, the game sales, the digital sales, and they've got a couple of mergers that are going to be taking over Activision, Blizzard. You're not going to see anything. You're not going to see the results until end of the year or January next year. So it's going to be sideways market. And this way, either you accumulate Microsoft, if you like Microsoft, for your kids' account, for your personal account, they pay you dividends, perfect, dividend growth, and they pay in growth stocks, or you can swing trade them. So at the moment, 299, the next zone below is about 283. Hey, who knows? They might drop there. Never say never. They've dropped there before. They've gone from the high of 344 to 285. Okay, I'm preparing for it. I may prefer up to 280. So 280 to 285 is the zone that I'm looking at to buy in, to swing trade, to swing up onto the likes of the 305. It's a nice, nice 5 to 10% profit there. So Microsoft is one. If I decide that, so Alex, just hold it on longer, I'll hold it until the end of the year and accumulate. If not, I'll just swing trade in and out, get a profit, and then move over to other stocks like AMD or Google or Berkshire Hathaway. So these are the few key stocks that I'm looking at. I'll repeat, AMD. My zone that I'm buying is around about 103, but like I said, the next one I'll be buying in 95. And if I want to take profit about 115 and above, I'll be taking profit at that zone. Okay, the second one is my Goldman Sachs. I'm looking about the 313 zone and then taking profit about the 330, 340 zone. Nice sweet profit with interest rate side. But if the interest rate hikes is pushing Goldman Sachs very productive and the next earnings, I might even hold them. Who knows? Because you're not going to buy this dip for a long, long time. Okay, next one, I think I may have be not on the chart no more. It's Google. So Google, I am also looking at Google because I like the stock split. If Google stock split looks really good, the FOMO comes in, hey, I might hold Google. So the zone that I was looking at just now, and I've lost my chart again. Let me retrace. I wish I had a better charting tool here. Okay, just let me quickly redraw them. Around about the 242, 245 zone to buy in, and then a swing trade up to 263 zone. No, sorry, 263. Okay, 2,638 zone, and then swing trade out by 280. So that's what I'm looking at Google. And finally, the Microsoft, which is at the 284, swing trade up the way to 307. That's what I'm looking at for. For the stocks I'm looking at, these are the four. Again, the rules, easy peasy, is stocks that you want to own. If you lose out on a swing trade, you own them. Don't go on a swing trade on the stocks that you're guessing they will go 10, 20, 30% swing trade. You just take the margin profit. Hold it. You could hold it between a week to 3 months. Okay. And if you hold great quality stocks, the downside may not be as bad as the likes of Hypergrowth, like Fastly or Fiverr. Those can go even lower, can go even deeper. And no one can really explain why sometimes. Okay. So really, this is me, short, sweet, 15, 16 minutes on what I'm going to do. My homework is just sharing with you guys. So 4 key stocks. And so I'm going to take a quick break. and I'll come back and eventually speak about crypto. I want to keep it separate, complete separate topic. I don't want this video to last for the next like 2-3 hours. And so I would like you guys to, if you want to speak about me, about my farming and crypto, my plans, it's a whole different ballgame with this Bitcoin, crypto, and what coins I'm looking at. Come back in the next 5 minutes. Let me prepare. Let me hit the loo and come back and let me share openly, transparently with you guys. Okay. So in terms of stocks, this is where I am. Swing trade, keep it simple. In terms of accumulation, what I'm buying, I might be buying Nvidia. I'm watching for Nvidia to the dip. If they do hit the 235, I might be buying some Nvidia. Or even looking at the Apple or the Berkshire Hathaway if I want to get more defensive. But the swing trade areas are AMD, Google, Goldman Sachs, Microsoft. That's me. Keeping it simple, no emotion, very passive because we're all busy with our day work just now. The last thing we need to do is watching charts every day. I cannot be watching support and levels for like 16 hours a day. I'm just here doing my homework when it's calm and now executing when the VIX are high. As what I've said in my second or third last video on swing trading. I hope you find it useful. And if you want crypto, see you in the next 5 minutes. All right, guys, see you soon. And hit the like button. ChaiX, right? Hit the like button. I appreciate it, ChaiX. I really appreciate that. Okay, if you guys, hope to see you soon. Okay, 5 minutes is up.